Who in your coverage space do you think has pricing power to stick this out?
Yeah, absolutely. Look, I think across my coverage, which is pretty vast, Altria, which, sells Marlboro and other tobacco products, they have very little exposure to the costs that are going up. But on top of that, they also have pricing power. The categories always had pricing power, and they have a very healthy dividend yield. So that's number one. And then Estee Lauder. Estee Lauder has gross margins in excess of 80%. So costs, they don't have a lot of exposure to input costs as well. Maybe some freight. They are exposed to some travel. But overall, I think they also, because they're a luxury premium company, can pass on the pricing as well, not only through price increases, but also through innovation.
Didn't Estee Lauder did they have some challenges lately? Am I imagining that?
Well, Estee has actually done quite well, considering the fact that a big chunk of their business actually comes through international travel and airports, right? In the duty free. It's one of their highest margin businesses, but they've been able to reallocate the resources in terms of the travel corridors that people are traveling. So they've been able to manage this pandemic incredibly well, better than I think most people expected.
Yeah, and to your point there, the shares are up about 22% this year. Okay, so Altria, Estee Lauder, you say, should have some pricing power. B&G Foods is an example of a company you're a little bit more concerned about.
Yeah, I mean, look, the ag complex in general, because of droughts, because of supply-demand imbalances, because we had a very thin crop a couple of years ago. We were exporting a lot of crops, and so we don't really have a lot of inventory across the entire ag complex. That then filters into frozen vegetables, which is one thing that B&G sells, but also edible oils, which they use in their baking business. They own the Crisco brand. So you're seeing those inflate. Look, I think by and large, most companies are going to be able to take pricing because the consumer is heavily stimulated right now. So I think that it's going to be a lot easier for the consumer to adjust. The question really is, how much are the retailers going to take? Some companies are in their second and third round of price increases. And you mentioned government data, but remember, some of these price increases haven't even gone through yet. So we're going to see a lot more of this as we wind through the rest of 2021.
Do you think these price increases are, to use the word of the year, transitory or not? How sticky are they?
Yeah, it's a good question, Tyler. If you go back historically, price increases across the CPG space are typically very sticky. Okay, sometimes you'll see some increases in promotions at certain retailers, but by and large, they are sticky. That's why you've seen margins for this industry have gone up, despite obviously being under inflationary pressures over the last decade, 2 decades, right? We've had these situations occur, not as bad as now, but we've definitely had them occur. I think the interesting question is, putting the input costs aside, how much of the kind of more hard costs like labor, how much is going to be structural? And that is an area that we have a little bit of concern about as we move forward. We think that the cost of just doing business, generally speaking, could be higher just because of that labor component.
Yeah, because once a wage goes up, it very, very rarely falls, right?
Exactly.
And you're making really the same point in other places that those price increases are sticky. You talk about an Altria, an Estee Lauder. There must be a cluster of other. What are the ones that might benefit or ride this through better? What do they have in common? And you pinpointed the agricultural complex as an area where it might be troublesome. What do the thrivers, let me put it that way, have in common?
Yeah, it's actually, look, costs are going up across the board in every input and also in labor and freight logistics, right? Mm-hmm. So no one is really immune. I think the point I'm trying to make is when you look at the margin structures of the companies that I've mentioned, their margins are pretty high, meaning that the actual component of costs in their P&L are actually very low. Like think about a Clorox, for instance, could have gross margins, below 50%. Estee Lauder has margins above 80%. So they're just less exposed to these costs. I think that's the number one thing that Altria and Estee Lauder and even a Coca-Cola have in common. The second thing is the ability for them to price and the elasticities with the consumer. Now, while the consumer can handle a lot now because of all the stimulus, you think about tobacco products, they've always been very low sensitivity in terms of pricing because consumers are going to buy them pretty much regardless of the price. Beauty products, especially premium beauty products, women want to buy the brand that they want to buy. Mm-hmm. And even when it comes to a thing like Coca-Cola, remember, they're selling concentrate to their bottlers. So a lot of the cost actually doesn't show up on their P&L.